When is the next time to get your second policy? By the end of this video, we're going to tell you exactly when. My name is Darius.
And I'm Carmen. And that's right, we said second policy. A lot of times people don't know that you can get multiple policies. So we're just talking about two. Between us, we have 6 and counting. So the idea is for you to understand, 1, that you can have multiple policies, and 2, why it might make sense for you to get multiple policies, and then 3, when do you start getting multiple policies? So where do we start?
So the first thing is when you have multiple policies because you want to, your financial situation has changed and you want to get more insurance or more coverage for your family or to cover your net worth if anything was to happen to you.
Yeah, like we talked on a previous video, every time that you get a pay increase, you should have more life insurance. Mm-hmm. So a lot of times our life insurance contracts don't allow us to increase the death benefit, right? So it will make sense for you to get a second policy so that you can cover the gap, which is the new income that you don't have covered in life insurance.
Right. Now, the reason why this is so important is because most people that have insurance, 50% of them that have insurance are underinsured, meaning they don't have enough insurance. One of the reasons for that is because a lot of people have group insurance through their employer, which isn't enough insurance in the first place. So they have to go and do some independent life insurance, which is either term or whole life. For us, we have enough insurance, so we feel like we had enough insurance, but as our income increased, we started to buy more policies. The reason why we started to purchase more policies is because we're business owners, and as our income increased through our businesses, we had to make sure that we had enough coverage for ourselves. Mm-hmm. We couldn't just use the same policy and put more money into it. Yes, we could put more cash value into our policies, but it doesn't increase our policies as much as the death benefit as much as putting it directly into that death benefit for a new life insurance policy. Yeah. So we got more policies when we made more money through our businesses. Mm-hmm. A lot of times people that are employed or have a salary, they don't have to worry about that because their salary isn't going to increase as fast as if you were to own your own business and start having additional income coming in. Mm-hmm. So that's the key.
And that's why it's important to continue to have that conversation, regardless if you're a business owner or if you're salaried, to make sure that you have enough death benefit to cover your income. Mm-hmm. Now, again, we've talked about this on a previous video, but if this concept is new to you, you should at least have 10 times your annual salary in death benefit. So just take a moment and do that math. We've talked about it before. If you have $100,000 in income annual, times that by 10, that's $1 million. Mm-hmm. And 10 being like 10 years, for example. So that is the minimum that you should start out with. And you might have to do a little bit of plug and play. Is it a combination of term and whole life insurance to make sure that you match that number? But know that that number should continue to grow and it shouldn't stay stagnant as, that the times change. Because when we started our very first policy, it was 6 or 7 years ago, and our income is different than when we started 6 or 7 years ago. In addition, into being business owners, our value is different, from 6 or 7 years ago. So mm-hmm. We always have to think about things and scrutinize our income, of recognizing that if one of us wasn't here, how our income could potentially change should we not be living.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School.
When it comes to business owners buying additional policies, you have to make sure that additional income that you're getting is consistent. Because if it's not consistent, then you run the risk of not being able to afford your policies, which is why people, a lot of insurance companies don't like this concept, because it has a high lapse ratio, because there's a lot of people that get this policy or get an insurance policy because they had a windfall that isn't consistent flow of income, or they get this life insurance policy because they work some overtime. They don't feel like working any overtime, or they had some change in their income. Now they can't maintain their policies moving forward. Whatever the reason is, people that are using this concept, insurance companies feel like they have a high lapse ratio because of how they're using the policy. And not everybody has the same consistent flow of income and should be getting into this concept, you should wait and understand, educate yourself, and make sure you know exactly what you're getting into before actually signing on the dotted line and paying your premiums.
And the concept meaning like the banking world that we talk about, using infinite banking. So that's the concept that we use for whole life specifically. And we utilize the cash value inside of our policies to finance our lifestyle. We use it kind of, think about it from a simplistic standpoint, we kind of use it as like a credit card or a personal loan. We use the cash that's built up inside the policy to finance our lifestyle, and then we pay the money back, all the interest, and then it continues to grow at a compounded rate, and we do it over and over and over again, as opposed to using money at the bank. So that's why Darius was saying the life insurance companies sometimes look at this, look at policyholders as a bad investment sometimes, because if you can't maintain that policy, then they know that you're not going to keep your policy on the books, and at the end of the day, it's business.
Right.
If you're not going to be able to financially afford this product, then you shouldn't get this product in the first place.
Let alone your second policy.
Yeah, and that's why even for us as agents, like for Darius and I specifically, we can't speak for any other agents outside of the Wealth Nation team, is that we are always making sure that our clients can afford the policies, because we also don't want the backlash from our business, right? If you don't have enough discretionary income to afford your policy, then maybe you should look at something for like a term. Maybe you should look at a convertible term specifically, so that when it makes sense for you to get a whole life policy, you can convert the term into a policy that you can potentially use for banking down the line.
Right. So whenever you are considering, let's say you have a whole life insurance policy and you're thinking about getting a second or a third, make sure you have a consistent flow of new income coming in to take care of those premium payments that you're going to have for the next 20 years if you decide to do a 20-year deal, or 30 years, or until the end of your lifetime. However you decide to set up your policy, make sure that you have the consistent additional flow of income coming in before you make that decision.
And consistent. Again, Darius said, this is not a windfall. This is not overtime. This is consistent income that you can count on to know that this makes sense for you to start another policy. Because we've seen people start policies with a bonus. We've seen people start policies with a windfall, but then what happens? They can't maintain it because it's not consistent. Mm-hmm. And that is always what we talk about. So that's why we say the good rule of thumb is every time you get a pay raise, get another policy, because you know that that's consistent income coming in. Now, don't get us wrong. You may have a significant windfall where maybe you have $100,000 because it's a death benefit, or it's you're an executive of a corporation. You have a larger bonus than some of us, right? You can get a policy in that instance, and that maybe you're getting a 10-pay policy. Maybe you're paying it for 10 years, 20 years, whatever the case may be. Maybe it's not a whole life, meaning you're paying for 100 years, for example, but it may make sense for larger windfalls to be placed in a policy so that you can use that money more strategically. Right. So again, it's just always going back to speaking with your agent, asking the questions, knowing that we're here to advocate for you, and making sure that we're recommending the right products for you based off of where you are now, because the policy that we may have sold you 2 years ago may not make sense now based off of where you are now and getting your second, third, fourth policy, whatever the case may be.
Right. Now, we mentioned 10 pay, 15 pays, 20 pays. That means you pay your whole life insurance policy for 10 years or 15 years or 20 years and then it's done. But the only thing about those specific policies is it doesn't have as much flexibility as the policies that go out for a longer time frame. The reason being is because after that time frame is up, you still have a whole life insurance policy, but those policy premiums are still paid. They're just not being paid through you. Mm-hmm. So what you want to make sure is, when you ask the questions, make sure not only that you ask the questions, but you're also telling your financial situation and what you're trying to accomplish to the financial advisor or agent that you're working with.
Mm-hmm. And for us, it always makes sense to get multiple policies. For us, it's never just a one and done deal. Again, because we aspire to increase our income, we aspire to leave a significant legacy for our children, and we want to make sure that we are taking the steps to make sure that this happens. So if this is something that resonates with you, then we always recommend exploring your options. It may not be today, but it may be something that you think about in the future, and to know that you actually can have more policies. Because I know when we first got started in insurance before we were agents, we had no idea you could get multiple policies. We just thought you got one and you were done. But as we recognized how wealth works and start surrounding ourselves with individuals who have significantly more money than we do, we recognize that, they have 2 digits worth of policies. You know, it might be 10, 20, whatever the case may be, but it makes sense because they can afford it.
Yeah. And the difference is what people have sometimes is that they own systems, and the systems that they own have people working for them. And then as you transition from people working for you, you own a system where you have money, and you have your money working for you. So those people that are in those different categories have different systems set up for themselves, which allow them to have some of the things that we're talking about, having 15, 20 different policies. Is because their money's making money for them. If that's not you right now, then that doesn't apply to you. If you're employed and you're working for somebody else, you only need like one insurance policy because you only have one source of income that's coming in that's consistent. So you only need to insure yourself for that one income. If you're a business owner, or if you own a business, or you're self-employed, you still only need one insurance policy because you don't have it where people are working for you. You're still employed. You just own your business. Mm-hmm. Now, as you transition to that other side, and I'm basically talking about the cash flow quadrant by Robert Kiyosaki, who wrote Rich Dad Poor Dad, is when you own a system and you have people working for you, what you're able to do is you're able to control the additional income that's coming into your net worth, or increasing your net worth. It's something that's continuously going, and it'll work without you. Now, the point that I'm trying to make is your policies, or what you choose to insure, is going to depend on where you are on this scale. Now, you have to really be aware of where you are right now, not where you want to be. That's the type of policy or type of insurance that you want to get for yourself. You don't want to get multiple policies when you're preparing to be an investor when you're not, because that's how you put yourself in a predicament to where there's a possibility that your business is going to go down. It goes up. You have these things that go up and down in the business, and you have to be aware of it. And it may put you in a situation where you can't pay your premium for a certain period of time, which is going to stress your system.
Absolutely. So yeah, always plan for today, not for tomorrow. And we're always going to tell you that on the Wealth Nation team is, let's talk about the facts right now, because we know that you want to get started. We see that you're anxious. We're anxious for you, and we're excited, but we have to make the plan work for right now. And then, let's reevaluate 6 months, 12 months down the line, 18 months down the line, and figure out if there's a different policy or a different play that we're approaching. So again, it's a team effort, and that's why it is so important that you disclose as much information as possible to our team so that we can help you, because it doesn't help us if you're only telling us half of the story and then we sell you a policy that makes absolutely no sense because you didn't give us the full picture. So that's another thing to take into consideration.
And it's okay to buy term insurance. That's what it's for. Term insurance is there for a reason. You have 20, 25 years to get your finances together, and then you can convert up into a whole life insurance policy. As your income increases, the insurance company is always willing to sell you an insurance policy. Yeah. We're always willing to sell you an insurance policy as long as it's the right fit for you, because not only do we want you to have life insurance, we want you to own your own lifestyle by controlling your finances. We're trying to get everybody to that point where their money is working for them instead of them having to do it. We want you to if you want to work. But we also want you to have that peace of mind that your money's working for you too, because that's the purpose of it. It's a tool that's supposed to be used to our benefit, not to our detriment.
Mm-hmm. Absolutely. Now go ahead and make sure that you have, first and foremost, life insurance in place. And then if you have one and you've been sitting on it for a minute, then go ahead and talk to your life insurance agent and see if it makes sense for you to get another policy so that you can make sure you cover that gap in your income. Mm-hmm. And remember to own your own lifestyle.
Or someone else will.